Let's talk next about Standard Bank. This is a conversation, hot stocks, about the banks globally and locally. Standard Bank, of course, is another major player here in South Africa. 20% held by China's ICBC. We didn't really hear too much of them. But over the years, the strategy has narrowed so that effectively Standard Bank has become ICBC's sort of proxy for the African continent. Many of the international operations have been slimmed down. Market capitalization, 195.2 billion rand. Price to earnings ratio 8.68, dividend yield of 5.59%. So you can get that sense. It's just like share price hasn't really gone anywhere, earnings have risen. The market reacted positively to their recent numbers, but it was partly because the prior year compares were quite easy because of write-downs associated with that problem in China.
Correct, yeah. So I think they're really in recovery mode, and they effectively had, I think at some point, ambitions to become more of a global bank spanning a number of emerging markets. Changed tack, really focusing on their home market being Africa and South Africa, and I think really so the recent results of some testament to that restructuring. As you said, there were issues with the Standard Bank PLC, which sold off, including that aluminium fraud where they had a write-off there. So if we look through to their sort of earnings, continuing earnings growth, that was around 13%. So still very solid. Also importantly, the return on equity increased from around 12% to over 15%, and is now in that 15 to 18% range that they target.
Well, let's look at the share chart. I suspect it's going to look fairly similar, although a little bit more muted over a full 5-year period, and that's why you can see more of these movements, whereas First Rand had a sort of more substantial climb in the early years. So it's been a little bit lackluster for a while, and then rises in 2014, 2015, falls quite heavily in the second end of 2015, and now, well, I don't know, because that share price around 120 or thereabouts is basically the same price that ICBC paid in like yonks and yonks and yonks ago.
Absolutely. So if you look long term, it's been a really disappointing performer, and I think people were quite confident in expectations that the ICBC partnership would result in additional business and growth, and it really hasn't materialized. So it's where to from here, I guess. They really, I think, are focusing back on the core. They've got a slightly higher cost-income ratio. They need to take a knife to the costs, I think, more aggressively. They've also had to do a large technology refresh.
I know, they keep shutting down their bank system once every Sunday, like 3 Sundays in a row. That tells you that there's some really squeaking machines in the background.
So, and I think they've maybe underinvested a little bit there compared to, say, First Rand. And so they are making the investment and potential cost savings going forward. So this is more about the potential from here, given that they've slimmed down. I think a lot of the large investment houses are quite bullish on them because it is a large bellwether, has underperformed significantly and can improve return on equity from these levels.
And Ben Kruger and Sim Shabalala seem to be sort of well at the helm. There's no issue really, there's stability. So you're going hot on this one?
Yes, I am. Again, the valuation looks pretty compelling at these levels.
8 PE.
Yeah, absolutely.
Okay, I'll go with you on that. So warm on that one.